What if I told you that investing just $25 a week could grow to over $165,000 in 30 years? Investing isn't just for Wall Street experts or the wealthy. Today, I'll show you exactly how to start investing as a complete beginner in 2025, even if you have limited funds and zero experience. The most powerful concept in investing is compound interest, when your investment returns generate their own returns. If you invest $100 monthly with an 8% average return, after 10 years, you'll have $18,000. After 30 years, you'll have $150,000. This is why starting early, even with small amounts, is crucial. Index funds let you buy pieces of hundreds of companies at once, like the S500. The benefits are instant diversification, low fees, historically reliable returns, and it's perfect for beginners. Popular options include Vanguard's VTI or Fidelity's FNILX. Robo-advisors automatically build and manage a portfolio based on your goals. Answer a few questions about your timeline and risk tolerance, and the platform will handle everything else. Most charge around 0.25% annually. Platform options include Betterment, Wealthfront, and SoFi. For tax advantages, consider Employer 401k. Contribute at least enough to get full matching. That's free money. Open IRA accounts with Fidelity, Vanguard, or Charles Schwab. Then, set up automatic contributions from your paycheck. You can start with as little as $25 weekly. The key is consistency. Make investing automatic. Set up transfers on payday, gradually increase as your income grows, and aim to eventually invest 15 to 20% of your income. Automation removes emotion and ensures you invest regularly regardless of market conditions. Avoid these beginner mistakes, trying to time the market. Focus on time in the market. Checking too frequently leads to emotional decisions. Panic selling during downturns, chasing trendy investments, and ignoring fees. 1% in annual fees can reduce returns by 28% over 30 years. Your action plan should be the following. Open an account with a reputable broker. Set up automatic investing. Choose a simple index fund or robo-advisor. And stay consistent and patient. The best time to start investing was 20 years ago. The second best time is today.